Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way to a new normal. And Phil, have you noticed prices at the pump? They're starting to rise.
I have noticed, and there's a reason for that as well. If we remember back in April when we were talking about the oil futures closing negative, that was back when everybody had seen the sort of immediate after effects of coronavirus, the shutdowns of shops, the people not going to work, 50% of hours worked falling, airlines with 95% reductions in capacity. And so the demand for oil had dropped a lot, more than 10 million barrels a day. And remember back then, and Saudi decided to have a price war, so the supply didn't fall to keep up with that. And so we had this oversupply problem, and we actually got to the point where the oversupply looked like it might have actually filled up the available capacity as well. And so you can see in the data that we're looking at today, most of that seems to have sort of stopped. We've seen a little bit of a pickup in demand as people are getting back to work. We've seen a reduction in production from around the world, but also in the US. And part of the reduction in production in the US is just because with the prices so low, it doesn't make sense to run a lot of the rigs. So the market's kind of adjusting to the new normal of a much lower demand for oil. And along with that, we've actually started to see the inventory levels, so say for gasoline, start to come back down toward normal. So we've started to see the supply and demand imbalance so level out at more normal matched levels where the inventory problem doesn't exist. And so prices are going up. The price of the oil barrel now is about $38. So a lot more than where it closed a couple of months ago in the futures.
All right, and let's take a look at our latest COVID-19 data. And this is separated by state and how people are returning to work.
Yeah, and this is obviously the thing that we're keeping our eye on is how is the restart going to go? Because if the restart goes great, we've seen some of the data this week in retail sales. It's actually been a faster recovery than a lot of people expected. The data that's coming in is coming in better than people expected. But we do run the risk of this second wave, don't we? And so there's some stats coming out of the southern states and California that's showing an increase in cases. And when you look at them, they are the states that opened earlier. They had more people doing things like going in person to restaurants. And it's interesting, as we've talked this week and last week about the spike in cases in those states, you can see people stop going to restaurants. So a little bit like what we've seen with Sweden, you can tell people that it's back to normal, but once they start to feel their health is at risk, they change their behaviors anyway. And so whether or not we tell people things are going to be back to normal, behaviors will change, and that's going to impact spending going forward as well. So I think it's really important that we do work out how to go back to work safely, so that we have less of these increases in cases.
And Phil, if we look at our last chart here on a more granular level, it's interesting to see exactly where these pockets are taking place, because Georgia, for example, actually looks to be a little bit better than the other southern states, with the exception of Atlanta. So it's interesting to see how these pockets are popping up.
Yeah, and Georgia was one of those states that definitely was in the media for opening way too early and letting tattoo parlors and all sorts of high-risk activities start back up. And it doesn't seem to have the increase in cases of all the states around it. But you can definitely see the southern states there. You can see where these cases are increasing. There's very little blue across the whole south of the US. So most states are actually seeing a pickup in cases. And provided that doesn't get too dramatic, and maybe we can change behaviors enough to make it safer, but it's not looking good for those states right now. And like we just talked about, as people see the risk to their health increase in those regions, they may change their behaviors anyway, which will put a little bit of a brake on how our economy is going to recover throughout the rest of this year.
All right, we'll certainly keep an eye on that. Phil, thanks for joining me as always.
You're welcome, Jill.
And thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.